Watson, thanks very much for your time. It's good to have you here again to share with us your views on China.
Hello, Paul. It's my pleasure to be here.
Now, let's start with a very simple question. What is your outlook for China in 2023, and how are you positioning your portfolio for that?
As we all know that in 2022, the market is not that good. It's quite volatile. But I think because China has reopened the economy, and I think there will be a recovery from the bottom in 2023. So I'm optimistic about the market. For the investment portfolio, I have two parts. The first part is about the growth sector. The second part is about the security sector. For the growth sector, it's mainly the high-tech stocks in electric vehicle sectors, in solar energy sectors, these kind of new energy sectors. As for the security part, it's mainly in the China's domestic consumption upgrade sectors. I think this is the two parts in my portfolio.
Now, China has been in the news quite a lot last year. And one of the big issues that have come up time and again is the issue of the China real estate problems. Do you think that will be a problem for us in 2023? Or do you think that the problem has been largely resolved?
I think most of the problems are already solved because the Chinese government, they learned a lot of experience from Japan and Hong Kong. During the past few years, the leverage ratio of some big real estate companies, they are quite high. So it's quite dangerous. The Chinese government, they see the problem, so they had tried to solve the problem since 2021. In 2022, some big companies, such as Honda, they are bankrupted. But you see from the recent market figures, the second house sales, they rise a lot, even 20 to 30% in most of the provinces. And I think in the second half of this year, the new house sale, they may also recover from the bottom. So I think the confidence had come back. I think most of the problems are already solved.
The other issue that top of mind for a lot of investors is the geopolitical issues facing China, especially with regards to advanced technology transfer to China. Do you think that will have a negative impact on China in the mid to long term? And how are you positioning your portfolio in the face of this uncertainty?
It may really hurt China in the short term because we can't buy the new chip. But I think we can solve the problem in the long term because we have the engineering bonus, and the Chinese companies, they are very hardworking. I think we can solve the problem in the long term. In my portfolio, most of my high-tech stocks, they are in the new energy sectors, the electric vehicle sectors, because in these sectors, the Chinese companies, they are quite competitive and they are self-sufficient.
China has finally reopened its economy after a prolonged lockdown. How are you positioning your portfolio for this reopening play?
The first sector I put more weight is the residential consumption sector because the confidence about the real estate sector come back. So when people buying the house, when people buy the house, they need to more refurbishment, new furnitures, new home appliances. So I think these sectors, there are a lot of growth potential. And the second sector is the traditional manufacturing sector, such as machinery and chemical industry. Because in these industries, the Chinese companies, they are already global. They invest a lot in the ASEAN countries, in the Belt and Road countries. They are global companies. So because the growth potential of these developing countries is very big, so I think these Chinese traditional manufacturing companies, they will also benefit from the growth of these countries.
Now, China has obviously done very well since it announced its reopening sometime in October last year, and the market has already gone up a lot. Do you think it's too late for investors to jump in at this point?
I think it's not late. I think it's just the start. The first reason is that the Chinese stocks, the valuation is quite low, both to its historical level, but also to other countries' stocks. I think it's quite low. The second question is, as you know, Chinese economy accounts for nearly 20% of the global GDP, but the China's stock shares in the global portfolio is nearly only 4%. So I think the foreign money has a lot of space to increase the flow, to inflow into Chinese stocks. So I think after the reopen of Chinese economy, the confidence come back. I think both the domestic money and the foreign money, they will come back to the market.
Thank you very much for your very insightful analysis on the situation in China right now.
Thank you, Paul.